Yeah, hi, and good evening to all of you. We have today the entire senior management team of Muthoot with us to discuss the Q2 results, followed by the Q&A. So we have George Alexander Muthoot, who is the MD, Alexander M. George, the DMD, George M. Alexander, who is Executive Director, George M. George, who is ED, George M. Jacob, who is ED, Epen Alexander, and ED, and Omen Mamen, who is the CFO. I would first take this opportunity to congratulate the management for consistently delivering more than what they have been guiding. And now I hand over the call to George, sir. Over to you, sir.
Thank you. Thank you. First of all, happy Diwali to all of you. Sorry that we had to conduct the meeting near the Diwali time. But anyway, now that Diwali is behind us, we are back. We are back to normal. As far as the company is concerned, the consolidated assets under management now stands at 60,900, which is up by about 17%, and the consolidated profit after tax 1,981, which is also up by 11%. As far as the standalone assets under management for Muthoot Finance, it is 55,187, which is 17% more than the earlier one, and the standalone profit has increased to 1,965, which is up by 13%. This quarter has been shown better performance compared to quarter one, which was almost a flat growth quarter. But profits were adequate in the first quarter, but growth was not there. This time we have been able to grow by about 5% just in this quarter. So we continue with our guidance of the 15% yearly growth target. So we hope that we will be able to reach the 15%. And if things are looking better in the months to come, probably it will be better than 15. So that is about the guidance for the growth. Profit has been okay, and what else is there? The subsidiaries has been Muthoot HomeFin has actually come down in its AUM. It has come down to 1,640 because we have not been aggressively lending, and there is always the installments coming and the book going down because of the installments being paid by the customers. The net profit here stood at a very meager profit of just 0.23 crores. And for the half year, it is 0.71 crores. Stage 3 assets stood at 4.73 crores as of September as compared to 5.94 in the previous year. So it's a little better than, and the net after stage 3 is 2.77. Belstar has started lending, and the book has grown from 2,687 crores last year to 3,354. But it achieved a profit after tax of 2 crores and 4 crores in the next quarter. The stage 3 assets decreased to 3.61 as of September as compared to 3.67, and the net stage 3 of provision is at 1.02. Compared to other microfinance companies in this league, we feel that Belstar has done a good work. Muthoot Insurance Brokers, yes, it is a 100% subsidiary. It has a total premium collection of 98 crores, 159 crores for the half year. It has received a profit after tax of 5 crores for this quarter and 9 crores in the last quarter. For the half year, it is 9 crores. Asia Asset, the subsidiary based in Sri Lanka, where we hold 72% of the share capital. The assets grow to Sri Lankan rupees 1,457 versus 1,298 last year, an increase of 12%. Glad to say, and it has achieved a small profit of tax of 2 crores of Sri Lankan rupees. Glad to say that the portfolio is now skewing towards gold loan, and today it's about 60% of the portfolio is gold loan. And going forward, probably in the next 4 or 5 quarters, we should see it also reaching 85 and 90%, just like Muthoot Finance. Muthoot Money, the whole loan subsidiary which is doing vehicle finance, has had not a good quarter because there were still a lot of write-offs and bad payments there. So the portfolio is of course small. It is only 282 crores. The revenue stood at 13 crores when we achieved a profit after tax of 0.92 crores. The vehicle finance sector especially is not doing well, and the stage 3 assets net of provisions stood at 12.89. The vehicle finance is limping back to normal very slowly only, and our assets, I think after this quarter, the company should start doing well. We have started more lending. So lending has started in the Muthoot Money, the vehicle finance, as well as the home finance, where we see in the next quarters the book also growing. So always there is a repayment coming every month. Every month the repayment is coming, or and above that, the home finance is also planning to grow. In Muthoot Finance, the credit losses stood at 1.7 crores for this year versus 4 crores in the last year. That is the credit loss, but nevertheless, it is only 0.03% of the assets under management. The gold loan per branch has increased to 11.84 crores versus 10 crores last year, and the average ticket size almost the same, 60,000 to 62,000, and the number of employees also same, 26,000 and 26,000. So I think that should take care of the major activities in this quarter. Now I think we are open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, sir. Thank you for taking my questions and wish you very happy Deepavali. Just 3 questions here.
Little more louder, please.
Sir, can you hear me now?
Yes.
Yeah, thank you so much. So the first question is on the demand outlook. Sometime during Q2, you had appeared on various media channels and participated in various conferences wherein you had highlighted that the gold loan demand was not looking as great as last year, which is obviously very natural. But already 40 days in the current quarter, how is the demand outlook looking like now? That's my first question. So the second question is on spread. What we are seeing in the last 2 quarters, the yields are averaging around that 21% mark compared to around those 23-24% levels, what it used to be about 2 or 3 quarters back. So, I mean, what are the sustainable level of spread that we are looking for, assuming that there could be potential benefit in your cost of borrowing in the coming quarters? And so lastly, what proportion of our book would be to customers?
Mr. Tibrewal.
Yeah, please tell me.
So there is an echo coming from the line from the management's line. So please check.
Echo from our side.
Yes, sir.
Is it better now?
No, still there is an echo coming from the management line.
Is it okay now?
Better, sir. Thank you.
We have to switch off our AC. Thank you.
Okay. Sir, my last question was, what proportion of our AUM would be towards customers to whom we would have lent sometime maybe in August last year? So the idea is to understand, I mean, can there be a potential situation where we could have, higher auctioning in Q3 towards these customers to whom we would have lent when gold prices were at its peak?
Okay. First of all, I did not quite understand when you said the first part of the question that there is not growth or something. I did not understand what we had said about growth. What is that you said there will be?
No, sir. The idea was just to ask, how is the demand outlook looking like now?
Demand outlook. Okay. Okay. If you put it that way, yes, we see good demand now because we feel that the economic activities have restarted. So we should see good demand going forward in the next 2 quarters. That is the first part of your question. The yield. Were you talking about yield or interest spread? The yield is 23, 22, 21 is what we should see the yield. 21, 22. 23 was just a one-off, which was one quarter. That's all. Otherwise, our interest spread has always been 12, 13.
NIMS.
Yeah, NIMS. It is NIMS. It has been 12, 13 is what NIMS are.
Yeah.
NIMS has been 12, 13. That is continuing with that only. So there is always a marginal difference of 1%, etc., which is not substantial, and that is also sometimes seasonal. Some old loans come in, we get little more interest spread there. Otherwise, it is always it doesn't vary much there. So we don't see much difference there also. Now your final question is about the number of loans given that time. So if there are any, first to answer without any number, etc., is that if there are any loans which needs to be auctioned, it has to be auctioned. That is part of this business. Some people who abandon the loan or they don't come back, there's no option other than to auction. So auctioning is not a sin. This anyway, when we auction it, we get back our money also. Probably we get a major part of the interest also. In some cases, probably we may not get the full interest. That's all. That has been part of the business, and we will continue to do that also. So in August, etc., definitely when the price was high, people would have taken more. Many of them would have repaid. Some of them would not have repaid. Those who are not repaid, if they're still not repaying and the interest is not paying or renewing, we'll have no option other than to auction it. That's all. Auctioning is it's not part of the business only.
Sure, sir. And sir, what was the quantum of loans which were auctioned during the quarter?
This quarter,
217 crores.
217 crores.
All right. Thank you so much. Wish you the very best.
Thank you. The next question is from the line of Digant Haria from GreenEdge Wealth. Please go ahead.
Yeah, hi sir. Congratulations on the great set of numbers. So just wanted your views that, is the price intensity in the gold loan industry, which probably started sometime last year, is it coming to some sort of rationalization, or there is still a price war going and, we are also participating in that because we may not want to lose good customers in these times. So any insights from you on this thing would be?
So there's no price war, but then everybody wants to hold on to their turf of business and nobody wants to lose business. That is why what you see, what you call an inverted commas as price war, etc. But then we have to remain a significant player in this, and we will have to do this. So we have to sometimes offer lesser rates of teaser rates, etc. But teaser rates are usually for shorter periods only. So after that, it should come back to normal. So intensity of competition, everybody needs to grow. Muthoot also needs to grow, others also needs to grow. And now is a time when we are actually competing with banks also. Earlier, we are not competing with banks. Today, we have to compete with banks also. So this is all part of the business only.
Right, sir. So my second question is again, linked to this only, that our operating cost to AUM is 3.5%, which is the lowest in the whole industry. So it gives us some room to offer, gold loans at say 9%, 10%, 11% also. It's commendable that, we've got down these costs. But my question is, are there more levers available on the operating cost side that you may maintain the same yields, but you can actually deliver, the same ROAs or better ROAs because the costs don't go up as much as your revenue and the AUM?
No, the operating cost can only, it can't go down drastically. It can only be maybe 10 basis points, 5 basis points. Other than that, it can't go down because some of these most of it is fixed also. You cannot go down unless we double the volume from 50,000. If you reach 1 crore with the same number of branches, same staff, probably it will, but that's only wishful thinking. But then, not to worry, we will see that we maintain our NIMs and the spreads, etc. I think that is the only thing we are there to do.
Yeah. So I'll ask this a little different that, if we go from say, we are right now at 11.8 crores per branch of gold loan AUM. If we say reach maybe 15, 16, 17 crores in another 2 years, 3 years time, would the costs grow in the same proportion, or then, that is where I'm hinting at that, can that lead to some operating leverage and we go down even from this 3.5% OPEX to AUM? Is that scope real or it's unrealistic to expect that?
Yeah, the cost will not go up proportionately because many of the costs are fixed. Salaries are fixed, the rents are fixed. Probably a few extra staff may be required, but then it will not go proportionally. Because to answer your question, if our business grows, per branch business grows 50%, our expenses will not come down by another 25% or so, but probably at least a 10% or 15% reduction in the operating cost can happen. But I think more than the operating cost, it will be trying to better the yields and the cost of funding, and that is where more flexibility can be obtained.
Right. So, and then lastly, my last question is that, can we reach a stage where with 15% growth, has the market for gold loans expanded enough? Are we seeing really new kind of use cases for gold loan or new kind of customers that maybe next 2-3 years we may actually end up seeing that 12-15% kind of growth opportunity for gold loan as on an industry level as a whole?
Yeah, I think industry can grow even more than 15% because there is a lot of potential. Now, when everybody is talking about gold loan and gold loan being convenient and the banks and everybody offering gold loans, the market will expand. No doubt about it. Today, people who are today reluctant to take a gold loan will be encouraged to take a gold loan because definitely, if you look at it in one way, it is the smartest loan available. Smartest loan. Take it for some time. Once you get when you get the long-term loan from somewhere else, you substituted it from this gold loan. That is how people generally use this gold loan.
Yeah. Okay, sir. Thank you so much for all your responses and all the best to the team.
Thank you. The next question is from the line of Manan Tijoriwala from ICICI Prudential AMC. Please go ahead.
Hi, sir. A few questions. Sir, are the customers responding to lower pricing and hence they're seeing the kind of growth that we have witnessed? So is this how we should interpret the present yields that we're looking at?
Question, please. What is that? I didn't understand it properly, sir.
So basically, we've seen the yields taper down by around 2%, and we've seen the growth being coming back for the company. So is that how we should interpret the present yields that we have on the book?
No, so no, the average yield always varies by 100 basis points to 200 basis points. That doesn't mean that the volume of business will increase or decrease by X percentage. That is not the parameter for growth. These are all the rate fluctuations or reductions which happens. It's basically the normal fluctuations because of collections, efficiencies, as well as discounts we offer to the customers, and as well as the churning in the portfolio. Because as you might know, gold loans are very short term. and we give a lot of rebates to customers when they close the loans or service the loans in the short run.
Right. Fair enough. Sir, we are still guiding for a full year growth of say 15%. So do we see the growth rate to taper off in the second half, or what should we interpret that as?
See, the quarter two we grew by about little more than 5%. So you should see the same growth. We have to grow at least 5% in next two quarters. So I don't think we have any headroom for tapering now. We'll have to do the 5% in both the quarters. We'll do it.
Right. Fair enough. And sir, could you provide some color on what sort of LTVs should most of your what sort of LTV should your portfolio be divided into? Say above 80% or above 100% or something like that?
No, at the time of disbursal, there is nothing more than 75. So at the time of disbursal, the average LTV should be in the range of yesterday's LTV should be in the range of 71-72%. That's every day, individual day LTV. But if you are asking with the change in the price and what we gave earlier and today and adding the interest, etc., it is different.
Yes, so if you could provide some qualitative or quantitative numbers on that, on the present portfolio.
Average LTV on the portfolio, 73%.
Sure, fair enough. Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So firstly, on our borrowing side, so can you help me understand the split between long-term versus short-term borrowings and fixed rate versus variable rate borrowings?
Right now, see, mainly we have three forms of or four types of borrowings. One, bank borrowings. Second is the NCDs. Third is the external commercial borrowings, and fourth is the commercial paper. So, bank borrowings are now we are mostly moved to term loans. It are all long-term loans. Secured NCDs, again, it is a long-term instrument. And third one is the external commercial borrowing, which is again also a long-term loan. So purely short-term borrowing will be the commercial paper, which is roughly about 4,000 to 5,000 crores at any point of time.
Right. And these bank loans, etc., are like fixed rate in nature, or these are variable term?
Bank loans are all floating rate, linked to MCLR. Usually the reset happens whenever there is a rollover of the loan or a reset on an annual basis. If it is a term loan, the reset is on an annual basis.
Okay. Annual basis. Right. So, sir, do you think we as a company, based on our past experience and based on the dynamics of business that we are in, there are further room to optimize this borrowing between long-term, short-term, and fixed and variable?
So, I think we have fairly improved in terms of the proportion of the long-term borrowings. Pure long-term borrowings we have now restricted to only to the commercial paper. Short term. So, in terms of floating rate interest, bank loans mostly are linked to, they don't give fixed rate instruments except for that period for which it is drawn. Otherwise, all the bank loans are to be linked to the MCLR. Secured NCD is almost entire borrowings is in the nature of fixed rate nature. So we have the right mix in terms of proportion between fixed and floating.
Yes. Okay. And then secondly, in terms of the leverage, right, I see last 5-6 years, the overall leverage of the company has fallen from around 4 times to 2.5 times now, right? Even though I understand that as a business wherein our ROE is more than our growth, obviously there's a deleveraging effect. But how do you see your overall leverage like in medium to long term? Do you think you would increase from here or you stay over here?
So that is ultimate focus to improve the leverage at least to a reasonable extent, maybe we should target for 5 times, but at least for the time being, reaching the 5 times, it is going to take some time. We don't have a view in terms of what point we are going to reach 5 times. But always the endeavor and focus is on to improve the leverage.
See, the question is to improve the leverage, you need to grow the gold loan book. And gold loan book is not, it's all individual loans, retail loans only. So you can't just improve it by X crores, etc. overnight. So it has to be built brick by brick. So as the gold loan is improving, the leverage also will improve, provided it is more than the our retail earnings.
Right. And then lastly, just one final one. So over time, as the cost of borrowings reduces, so do you think you would be looking to pass on some of these benefits to the customers by reducing the yields and maintaining the spreads, or you would look to increase your spreads?
No, sir, exactly what you said. We would like to maintain our spread, industrial spread, and pass it on to the customers. That's what we have been doing always. Always doing that, maintaining our net spreads and passing on the difference to the customer.
Okay, got it. So that was very helpful. Thank you.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hi. Good morning, good afternoon, and congrats on the results. I just have a couple of questions. Firstly, our number of inactive customers is like 3x the number of active customers we have. Have we done any analytics on how many of our past customers now have gold loans with other banks and NBFCs? And if so, what are we doing to get them back? That's my first question. And the second one is, what is our stage 2 loans ratio? So yeah, these are the two questions.
Okay. So see, inactive customers are customers who come to the company, take a gold loan. Afterwards, when they close the gold loan, they go and they take back the ornaments. The ornaments are in their house. They'll come back only when they need the second loan. So almost always, 80% of our customers are repeat customers. So they would have done a transaction with us maybe 1 month back, 6 months back, 8 months back. Only whenever they need the loan, they'll come back. So that is our custom. So what we do constantly is always reminding them that we are still there and giving better and superior service to the customer. They will prefer to come back to us. We cannot force them to come back to us. To answer your question on whether we generally we feel that when they take a next loan, it will come to us only. That's what. But we have not done a study of all these customers, whether they have taken a gold loan or from elsewhere. We can only understand from what our managers and field staff tell. They still see that the first choice for them, even our old customers, would be to come back to Muthoot.
So would that be very difficult to do, given that we have the KYC done at the time of the loan, and we have the credit bureaus? So would that be a very difficult thing to do?
It may be possible. We have not tried it anyway.
Okay. Just wanted to understand the sense of whether a customer first takes a loan from you and then later on, he goes to a bank. I'm just trying to understand the progression of the customer's life cycle. So that is why I was asking.
That happens with the very big loans, maybe 15 lakhs, 20 lakhs, etc., where the interest differential would be substantial, etc. But still, it is not simply just the interest, the consideration for shifting from Muthoot to somewhere else, but some other considerations also. Definitely, there will definitely be some people going from Muthoot to a bank, or maybe sometimes to an NBFC also. But generally, it may be only to a bank.
Okay. So, and on the stage 2 loans ratio?
Stage 2 will be 6,153 crores, around 11%.
Okay. Yeah. Thank you so much.
Thank you. The next question is from the line of Shubhranshu Mishra from Systematics. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. A couple of questions. One is that are we really cheaper than the banks in sub 50,000 ticket sizes if we add up all the fee that is levied to the customer by the bank? That's the first question. Sir, the second question is on the cash that we are carrying as a percentage of balance sheet. It's almost at around 12%. This is a decadal high, sir. And with so much of liquidity, why are we carrying so much of cash on the balance sheet? And the third question is, sir, if I look at the loans that's getting processed per branch on a quarterly basis, it would be at around 1,800 odd levels. How do we increase this? What is our strategy to increase this from the new customers, sir? Three questions, sir. And my fourth question is on a data keeping question. What is the interest accrued for this quarter? Thank you.
Yeah, comparing of interest and charges, etc., there are certain charges which some banks charge. There are certain charges which others charge. For us, we try to keep it as customer centric as possible, that we don't take any upfront charges, we don't take any appraisal charge, we don't take any pre-closure charges, etc., and interest on the actual number of deals. Those are some of the things which we offer our customers. So probably everything cannot be compared apple to apple from one company to other company, but generally the customers have the feeling that other than banks which give at very low rates, we are the most reasonable of all NBFCs with regard to not only the interest rates, but many other charges, customer centric activities, etc., which we do for them. Your second question was about
interest accrued. It is 2,384 crores.
Can you repeat the number, sir?
2,384 crores interest accrued.
Sure. And cash? Why are we carrying so much of cash?
Liquid cash.
Yeah. So okay. See, no, I think no, we have been maintaining a higher level of liquid cash. No, I think ever since the COVID has started, we are conscious about the fact that we are maintaining, but the times require a higher level of cash. I think once now, since we are upgraded to AA+, I think gradually we will think about reducing the level of cash holding. But still at least for some more time we'll have to maintain that higher level of cash flows. But over a period, we would like to bring it to a reasonable level.
Right, sir. And one question remains unanswered, sir. The number of loans, how do they increase per branch from new customers?
I think new customer numbers we have provided in the presentation. That's about 3 lakh.
3.5 lakh. New customers.
All put together.
Right. Sure, sir. Thank you.
Thank you. The next question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, hi. Thank you. So just on the question of branch expansion, now when you look over the last 1 year, there has been barely any branch expansion that has happened. And even when compared to 2 years back, we have added only 80 gold loan branches. So what's the plan going forward, and how much approval do we have from RBI on how many branches that we can open over the next 2 to 3 years?
Yeah, see, we would have, in the last 2 years, we would have opened 80 branches. We would have probably closed or rationalized another 200 branches also. So we would have opened about 400. We would have maybe merged or rationalized another 300 branches. So the net would have been, I don't know the exact number, would have been 100, 200. So this year also the numbers have not been, we've not started too many branches. I think there is nothing like an approval from the RBI. Whenever we require a branch, we go to the RBI and they give the permission for that. We don't take any approval and keep it with us. So when we require a branch, we go and approach them and get the approval for that.
Okay. So I think one of your competitors had mentioned that approval from RBI has been little bit delayed, and because of that, their branch expansion plans are not on track. So
probably he is right. I don't know. Probably he may be right.
But that is not a reason why for us branch expansion has been a bit tepid.
No.
Okay, thank you very much.
Thank you. The next question is from the line of Viral Gandhi from 91 Capital. Please go ahead.
Hi. You mentioned earlier on that competition has increased somewhat. Could you just explain where the competition is coming from? Is it from banks or is it from NBFCs?
Okay. In competition, not competition, I think people have become aggressive. I don't call it competition. Everybody has been doing gold loan, their banks, etc. Now they are also aggressively doing gold loans for reasons. Well, everybody knows that a good portfolio to be had in the books is a gold loan. So that is every bank worth its name is also doing it, upping the gold loan. There are some NBFCs also who have now started thinking of gold loan. Probably they may also be having the same thoughts about this. But here I would like to add a word of caution. Caution is that this is not as easy because as it looks outside. So probably gold loan you may not have NPAs and bad loans, etc., or non-performing loans or loan loss, etc. But operationally it is very challenging. It's very easy to do a small 2 branch, 3 branch, 10 branch, 50 branch gold loan. But when you start to take it up, all these operational issues and operational challenges come up, and probably we have passed that, so we are aware of that. When new players are coming, they will realize that as time goes by.
Okay. Thank you very much. And just one follow-up on that is, do you have any views about how long this period of competitive intensity could last?
We didn't get you properly. What is that? We didn't understand.
How long do you think that your competitors will be aggressive? Do you think that it will last for? How
long they will be aggressive? We don't actually need to worry too much on that. If more and more people are coming into the market, is also expanding. It is not that there is only X amount and they are taking away 20% from us and 5% from us. No. The market is also expanding. When banks and everybody is advertising and doing gold loan business, more and more people, more and more customers may think of taking gold loan as an option. So that is what we should see. How long they will, it is for them. Probably if the economic activity or their core business comes back to normal, usually that is what we have seen, that the same thing happened in 2008 also, when everybody jumped into the bandwagon and when there was a big problem. And afterwards, when their own sectors started coming back to normal, they lost interest in this because that is not their focus. And only the focused companies remained and focused to gold loan. Others came in, they saw something when their core business, old core business started back, they went back to their old core business where they had probably more strength. So it will depend on such factors also.
Okay, thank you very much.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
So, sir, what is the incremental LTV that we are lending at, and how do we actually determine this particular LTV to lend?
Actually, we offer customers different options. Maybe we have a 60, low LTV, low interest, higher LTV, higher interest options, etc. But on an average, what we have seen is some people take the 75%, some people take lesser, some people take even lesser. On an average, on a day, we don't lend more than 75% LTV. But on an average, if you take everybody taking loan and if you find out the LTV, average LTV, it should be in the 70-71 range
only. Okay. And since there has been a sharp, if we compare it, say with 1 year back, your LTV on an average used to be somewhere around 63%, and now it is around 73%. So, I'm just trying to understand what has been the change exactly in the sense.
It's It's simply this. If today the price of gold goes up by 10%, our LTV from 73 it will come to 61. Simple as that. So at that time the price was high, so the LTV was lower. So when the price is stable, it will be in the 70-71 range. When the price is if goes up, the LTV will come down. If the price goes down, the LTV will go up.
But sir, at that point of time, again, you would have lent at only 70-75% LTV only, or else you were lending lower at a higher price. Was that the strategy?
Already with us, the LTV will be much lesser. The incremental lending is what I said, 70-71%. That's always 70-71%. Incremental lending.
Historically, your LTV was lower.
Yeah.
Okay. Okay, sir. Fine.
Thank you.
I'm done.
The next question is from the line of Nishant Shah from Point72 Asset Management. Please go ahead.
Hi, sir. Congrats on the results. I'm trying to understand the different types of customer bases that you have. So I take it that most of our customers are going to be those small ticket, rural, semi-urban kind of customers where you would not see very material bank competition. But if you could kind of split your AUM into slightly say higher ticket kind of customers where banks are active, and say semi-urban or urban geographies where also banks are active, what percentage of your AUM is it theoretically at risk from competition from either say banks or large NBFCs or whatever else? That's my first question.
Okay. To answer your question on a lighter note, it is not that we are afraid of banks, and sometimes we also give lesser rates than banks. So if it is only banks.
Hello?
Ladies and gentlemen, the line for the management has got disconnected. Request you all to please stay online while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you, sir. Mr. Nishant Shah?
Yeah.
Yeah, please go ahead.
Yeah, so...
what I was saying was, it's not that we will not at any point of time be able to compete with banks. If necessary, we can even compete with banks on rates. So that's not the question. So your question is whether we have bigger portfolios, which are bigger size portfolios, which are likely to go to banks. I think that was your question.
Yeah, so, not likely to go, but at least face some competition where you'll have to kind of work a little to retain those customers. Yeah.
See, that is the whole thing is dependent on what is the option which borrower has. Does he have an alternative? If he has an alternative, there is always a risk that that customer might or can move to an alternative lender. Not necessarily it should be for gold loan. It could be an alternative loan product. That risk is always there. But given the flexibilities of the gold loan, given the fact that it is it could be dispersed in a very short period of time, and customer can easily meet his requirement for a shorter term. But if his customer's basic requirement is for a longer term product, certainly he might actively look for an alternative choice, and if he has an alternative availability, he certainly can move on. So, being a large book, there is always a possibility that some customers can move. But the way we have consistently managed to grow our book and maintain our yield shows that there is a large customer base which is willing to come and take a gold loan. So we don't consider that as a significant risk.
Yeah, no, I'm particularly kind of like asking about competition from banks in a gold loan product. I fully agree with you regarding the other competitive products. They're not as value add or not as flexible at least as a gold loan. But banks are doling out a lot more gold loans as well. Like we see it with HDFC or SBI or anyone. So that was the sole kind of like purpose of trying to understand what percentage of the AUM could potentially be at risk.
So we don't have that kind of a portfolio being identified that this kind of customers can move on to another lender. So the way we look at this, look, all these banks have grown in the last 6 to 9 months, but we have not degrown. We have been able to grow the book. So there is a market which is available, and again we are repeating that we are not concerned about customers moving to an alternative player or a bank, because there is a market available, niche market available for us, and certainly we will be able to grow in spite of the competition exists.
Fair enough. Yep, that's it from me. Thank you.
Thank you. The next question is from the line of Harshvardhan Agarwal from IDFC AMC. Please go ahead.
Hi sir, thanks for the opportunity. I just wanted to understand the auctions that we do, is it like bunched more towards the end of the year, or it's evenly spread out during the whole year?
Yeah, it is spread out during the whole year. We will do it weekly, monthly, depending on region. Some regions, today, every day some auctions are happening somewhere. Every day something is happening somewhere.
Right. So the reason why I asked this is because if I were to look at the data that we publish in the annual report regarding the amount of auctions that we do, I see that between FY17 to FY19, our annual average is somewhere around 1,500 crores of worth of auctions is what we do. But in the first half till date, we have done somewhere roughly around 250-300 crores of auctions. So should we assume that this historical average number is what we would be at in the second half? Like we'll catch up with that number, or the auctions will be way less this year?
No, I think your historical average, I don't know from where you got it. Last year our auctions were
385 crores. FY21 auctions are very less. 385 crores.
Last year it was 400 crores. Prior to that year it was 800 crores. And that is, I think that's all. So even if we need to auction 800 or 1,000 crores in a year, the book is also growing. So 2 years back our book was only 25% less than what you see today. Even then we did 800 crores of auction. Last year, because the prices were actually good, we did not have to do much auctions. So this year, probably we may have to do more auctions, but it is part of the business. Auctions is part of the business. You see, we don't lose any money because of auction. It is only that customers abandon the gold, is not coming back and taking it, and we have no alternative other than to auction it.
Right. Sure. Thanks a lot.
Thank you. The next question is from the line of Mananti Joriwala from ICICI Prudential AMC. Please go ahead.
Hi, sir. One forward question on what was asked earlier. So, when you mentioned there are around 11% stage 2 assets as on end of September 21, could you provide a corresponding number for the previous quarter, and what sort of rollback or forward flows should we expect from that book?
No, I think previous quarter, I think the number was less. So this quarter, and as of September 30th, the stage 2 asset is about 11%. And I think your question was how much of this rollback will happen out of this 11%, right?
Yes.
Yeah. So we are conscious about this number, and we are looking at various methods to control this number and look at our track record in terms of managing this overdue book. And finally, just because an account is an NPA, we don't lose anything. We de-recognize the interest portion also once an asset becomes a stage 3. So to answer your specific question, we are taking active effort in terms of controlling this number. Let's wait till December 31st.
And so one question, how much would have been the OPEX in this previous quarter on advertising during the IPL?
IPL, we are not sponsoring this time IPL, sir.
Got it.
No, I think it was the other Muthoot which was doing the IPL. We stayed back this year.
Advertisement expenditure is 29 crores, but that doesn't, we don't have any sponsoring towards IPL.
Got it. Okay.
Thank you. The next question is from the line of Bhuvnesh Garg from Investec. Please go ahead.
Hi. Thank you for the opportunity. So I have a couple of questions around the interest rate. Firstly, just want to know what is the lowest interest rate offered by Muthoot Finance on gold loan? That is my first question. And the second question is, on the website I see there is an advertisement for 57 paisa loan. So just want to understand how does it commensurate with our overall yield of about 20-21%. So that's the second question. And third question is on the how do you categorize customers on different interest rates? Like which category of customers get lower interest rate and which category of customers get higher interest rate? So these are my three questions. Thank you.
Okay. So as you said, our site advertises 57% because we need to compete with the market. So 57% is correct. That is the lowest we need to offer to our customers. These are all teaser rates. So when we give teaser rates, we see that finally we get a reasonable or good interest rate. That is our business model. This is nothing new. We have been offering this earlier also, lower rates, etc. So we have to maintain our market share. We have to be seen as competitive in the market compared to others. When others are offering at low rates, we should also see that we also offer the low rates. But it's our job to see that we maintain a reasonable margin on our company. How we do it is actually within us.
Okay, and on this customer categorization, I mean, which customer, how do you categorize customer on interest rate? On which customer do you offer lower interest rate?
I think that is also a function of the branch. We leave it to the branch to offer customers lower rates, etc., so that customers are kept happy.
Oh, okay, sir, fine. Thank you.
Thank you. The next question is from the line of Shweta Daptardar from Prabhudas Lilladher. Please go ahead. Shweta Daptardar, your line is in talk mode. Please go ahead with your question. As there is no response from the current participant, I have muted the line. The next question is from the line of Vikram Subramanian from Spark Capital. Please go ahead.
Hello. Thanks for taking my question, sir. So my question is a bit on the operational aspects. First on this competition and the teaser rates and the yields that have been discussed quite a bit during the call. I would just like to know operationally at a branch level, what other methods can the branch or do the branch staff follow to increase customer walk-ins, customer count, basically maintain their market share? Which is especially critical during this time of slightly increased competition. And also, operationally, what do the branch staff do to control that particular branch's LTV when, say, for example, tomorrow there is a, say, 5% drop in gold price? How do we react to that? These are my two questions.
Branch marketing, we have a good marketing team, sales team, etc., who go out and do activities, on-ground activities. Usually the branch staff do not go out for that. Only occasionally they accompany these people. Otherwise, there are branch activities particular. Not that every day there is an activity. It is in pockets we do this outside activities for this. The second one, your question is about it is done at the CBS level because ours is our core banking system. So any change we do, we can just do it in 1 second in our computer center. The branches cannot go beyond that. That is, the rates are set at the head office level itself. So there is no operational flexibility for the branch.
Sir, second question was on how to control LTV. So meaning, you said because of the core banking system, incremental LTV.
Sir, I think I can say we set it as a maximum of 75% of the day's price. It is set every day. Every day it is set. If today's gold price is X, we set the 75% of that as the maximum which a branch can do. That is set every day. Every day it is.
So if gold price falls, say maybe 5%.
Tomorrow, the LTV will be falling tomorrow.
Only on the incremental loans, right? On the existing loans.
What is given is given, sir. What is given is given.
Got it. And just one add-on there. I couldn't get that correctly. Maybe there was a problem with my line. There was some mention on branch expansion. Could you please elaborate on that, sir? Branch expansion plan for the current targeted run rate for this year and maybe the next couple of years?
Yeah. Whenever we need branches, we approach the Reserve Bank and get permission for that. So we have, whenever we feel that there is a branch expansion required, we'll do that. We plan to open about 150 branches in the next 12 months.
Okay. Fine. Thank you.
Thank you. The next question is from the line of Prolin Nandu from GMO. Please go ahead.
I hope I'm audible, sir. Two questions from my side, not related to your quarterly, but one is, we have had in the past, we have seen some correlation between marketing spend and the loan growth. While gold loan continues to be sort of a full sort of a product, but their customers require some sort of a nudge. And we have had associations with some of the great brands like Amitabh Bachchan, and we have done some innovative campaigns in and around Kumbh Mela. Just wanted to understand, is there any particular strategic reason why we decided to stay away from CSK and IPL this year?
No. We have been associated with IPL for so many years. We thought, let us give it a break at least once. So let us see whether we can come back with more vigor after that. That's all. Nothing more than that. We still have the Amitabh Bachchan and the other things with us. And IPL is not that one that just because of IPL also. We also want to assess whether without IPL also whether we can get business. Nothing more than that there.
Fair point, sir. Another second question is that we sometime a couple of months back we have changed our memorandum of association, and now we can do a lot more things from our branches. Any color on that? Do we have plans to, because we have amazing, huge footfalls right on a daily basis to our branches. Anything to monetize these footfalls further? And and is this change in memorandum of association in that direction?
No. We have got an enabling provision in the memorandum association to do something. Some of these things now, everything is so, changing, flexible and changing these days. So we don't want to go to the shareholders for approval. So we have just kept an approval. Probably something will come up. Some associations will come up. We always have people coming and talking to us. Can we do that? Can we do this in the branch? And we are assessing those, and which we feel is beneficial to us and not a troublesome to the customer, we will start it. So we just got enabling provision.
Sure, sir. Thank you, Dr.
Thank you. The next question is from the line of Nirmal Bari from Samiksha Capital. Please go ahead.
Yes, sir. Thanks for taking my question. It's just a clarification. This stage 2 asset that you mentioned of 11%. So at what point do we classify a loan as at stage 2?
This is more than 30 days.
Overdue for more than 30 days.
Overdue for more than 30 days.
So is it the interest outdue that is more than 30 days, or once the principal is becomes overdue for more than 30 days?
No, either one of them. For gold loans, because no interest is required to be paid only at the end of the tenor. So primarily it is the loan maturity date, because there is no installments or an interest payment contractually required for the customer in between.
Okay. So for our general loan of 1 year, when the loan crosses 1 year and 30 days, that is when it would be classified as stage 2.
Correct.
Okay. Okay. Thanks for that clarification.
Thank you. The next question is from the line of Shweta Daptardar from Prabhudas Lilladher. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes,
yes.
Yeah, thank you, sir. So, a couple of questions. So, when you say fresh loans with new collateral to existing active customers, and which has been consistently growing for you, am I getting it correct if I put it across like, is it that, once the existing loan is completely repaid for, and if the same customer comes back with the same collateral with a fresh, freshly for a loan, then it's counted as a new collateral and a fresh loan to the existing customer? Am I getting the contours of this correct?
See, customer brings one chain this time, he takes it back. Next time he brings a chain, we actually do not know whether it's the same chain or not. Anyway, he is bringing a new ornament, a fresh ornament, that's it.
Right. So, this is not like, because one of your peers do that, like when the loan is still going on and, generally they call up the customers, closer to the maturity period. And that's where they kind of insist that you can further go for a renewal, and then it's counted as a new collateral.
Renewal? Okay, they have to take back the gold and maybe take a new loan. Yeah.
Okay. So secondly, so when you mentioned, stage 2 11%, and even if I look at overall stage 3 1.85%, although you've been mentioning that the recoverability value of the underlying asset is absolutely 100% and your auction numbers are also lower, but what are these category of customers? Were they victim of pandemic challenges? Was it because of your shorter loan tenure, because of the high churn rate in the book, or is it because of the underlying price fluctuations? So what exactly has led to this kind of slippage?
It is not that we go after each customer, this of 20,000, 30,000, 50,000, 50 customers, not worthwhile to go and ask him whether it was a COVID problem or no. But usually we don't need to do that because there are no EMI requirements in this. There is no monthly commitment for him. So he has the time, all the time in the world for 1 year to repay the loan at any point of time. So if he brings in the money, he pays it, that's all. And it is not worthwhile, it's not viable also to go and ask and find out from the customer what is his problem. But the fact remains that if he is paying the interest properly, if he is servicing the loan, he'll continue with the loan. If he finally is abandoning the loan, we'll option it. That's it.
Okay. So any loan repayment extensions given in the period due to which this must have also happened?
Yeah, whatever you see as NPA in the books currently is the extensions we have given to the customer. So when customer requests for some more time and the branch is also reasonably optimistic or hopeful that the fellow will pay it, and he says, don't auction my gold. So we delay the auction and give him 2-3 months time. That is what you see as NPA in the books. Those are the NPA that we have consciously given time to the customer. If not, we would have auctioned the gold and have nil NPA.
Okay. And sir, absolutely the last question, you mentioned about competition. But then, it's been observed that last couple of quarters, the unorganized market, which has a lion's share in the gold lending business, has also kind of throwing huge competitive intensities. So would you like to comment there besides what you were talking about banks and bigger NBFCs getting into the game? I
think we have no much visibility or information about the growth of the unorganized sector. I don't know from where you have got that information. If they're probably they may be growing also. I'm not sure about that. If they are growing well and good, I don't think they are also definitely they are a competitor for us. There are a certain set of customers whom they also a set of customers who go to them. Whatever be the rate, whatever be the company, whether it's bank or NBFCs, there are still some customers who will still go to unorganized sector. They still have their market share and their market. They will continue to do that. Whether they have increased their business, I'm not sure, madam.
Got it. Sure. That answers, sir. Thank you, and congrats on good set of numbers. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Here, George Alexander Muthoot here. I had with me our Chief General Manager Vijimon and our CFO Mr. Umman and DGM Finance Shanti here in the call in this head office. The other directors, etc., have attended the meeting from their off-site. So thank you for supporting us. All of you have always been a big support for Muthoot, and we will continue to respect your views. We will continue to grow and maybe be of value to all our stakeholders. We assure you that, and wish you all the best. Once more, a happy Diwali and a happy New Year. Thank you.
Thank you.